Thanks everybody for coming out today. We've got a great panel of founders that are local here to Salt Lake City. My name is Sheng. I come from LA and I work with Mucker Capital, and LeadrPro is my starter as well. On the Mucker Capital side, I basically run their growth team, so we work with early stage portcos on go-to-market and growth, specifically after the pre-seed, seed stage, somewhat up to Series A. So if you're ever looking to raise, feel free to reach out to us. We definitely more focus on the founder and are more of like a blue collar type of founder VC. That's the kind of founder we like to look for. I like to also thank our hosts, K&L Gates, which is a law firm that we work with that's helped sponsor quite a few of these events, and also JP Morgan. Today we've got Jeremy who's going to tell us a little bit about JP.
Sweet. Thanks, Chris. Thanks everybody for being here. So Jeremy Bergen, work at JP Morgan on our innovation economy team. So we cover really from seed all the way through the late stage tech companies. About a year ago that changed a little bit and we added a startup banking team and they cover pre-seed and seed, so my world got a little smaller. Tyler and Alec are on our team too, so they helped really do all this and organize stuff. I've seen your names on emails sometimes. I don't know if we've all met. You and I met actually at Albums.
Yeah, that's right. Yeah.
I was leaving a meeting and it was like, hey, let's figure this out.
Yeah.
But yeah, we're happy to be here. Happy to have Mucker in town and just to be a part of the scene. We're really just trying to build the brand that JP Morgan, really if we bring you in early, we can take you all the way through to wherever you want to go. Obviously there's domestic, international, FX, M&A, you name it, IPO, whatever. So we'll be around after too, so if you have questions, definitely reach out.
Cool.
Thanks.
Awesome. So just kind of kick things off with what the Founders Roundtable is. We've been in 12 cities now, and each city kind of has its own theme in terms of what kind of bubbles up as the talking points. So I'm curious as to today what's going to be. We've got a great panel of founders here that are local to the area. To kind of start, why don't we just go around and just introduce yourself, tell us about your company, and any traction like numbers that you feel comfortable with, whether it's raise, revenue, or like just stage of the company. Entirely up to you. Let's start over here.
Awesome. Thanks, Chris. I'm James Thornton. I'm the CEO of Taffy and Daz3D. I've been in this market for a while, and I've run everything from public companies like Cricket to other businesses here in the market. This business is an avatar company, so we do character content for game development, for entertainment. Our lead investor right now is Benchmark Capital. And so for maybe the last 15 years, I've been involved with equity-sponsored businesses.
Good to meet everybody. I'm Todd White. I work at a company called GuideCX, and we do an implementation software. So from point of sale, how do you get your customer live as fast as humanly possible is what we do. Speaking about blue collar, I kind of cut my teeth selling software into the car dealership. So I knocked doors, hand-to-hand combat, putting deals together with car dealers, and that was a grind. But transitioned here, we launched the product about 7 years ago, Series B company, and yeah, we're just located right over here. So
Across the street.
yeah, not too far away. Yeah.
Hi everyone, my name is Luis Benavides. I'm the CEO of Neighborbrite. My background is on engineering. I worked at Google for over 14 years. My co-founder is also from Google. And what we do is we do landscape design using AI. So you upload a photo of your yard and it gives you different ideas and design options. And then we're building a marketplace that connects you with the landscapers that can execute the projects. In terms of traction, we just crossed 50,000 registered users. We launched in August last year. And yeah, things are getting busy. And it's a lot of fun.
'Tis the season for you guys right now, right? Yeah.
Awesome. Hi everyone. My name is Parikh. I'm the CEO of Bandwango. Launched this company in late 2015. Took a huge career shift. I moved to Utah from New Jersey to do a PhD in bioengineering from 2007 to 15, and then shifted fully my career to this company. What we do is we work with a lot of community organizations like tourism bureaus, chambers of commerce, influencers, food beverage associations, and enable them to organize all the fun local things to do into experience passes that are delivered to consumers' mobile devices. So paid attractions passes, wine tasting passports, savings programs, scavenger hunts, all sorts of fun stuff for different types of businesses. We're raising our third round of funding right now. We're in about 475 different markets across the US, Canada, and Western Europe. And it's been a journey to get here. So thank you.
You didn't move here for the bagels?
Enjoy the pizza.
I guess I am the only vertical SaaS founder. For a while, I thought that was like the best, coolest kind, and it's definitely not anymore. My name is Ryan Anderson. I'm the founder and CEO of Filevine. We sell software to lawyers, governments, corporations. We're a 9-figure revenue business, kind of hoping to IPO sometime in the next 24 months. About 400 employees and growing incredibly fast. The business was good a year and a half ago, but got really, really good when ChatGPT came out, and we were able to walk our customers through all the things they could do with law and AI. It sort of tripled ASPs overnight, so that's kind of completely changed the course of the company. I think it would have been a great company no matter what. We still would have been, a 9-figure business, but I don't think the growth rates would have been 60, 78% had we not sort of been at the right place at the right time for AI. I don't think there's a better place for large language models than legal, and so, that's us.
Very cool. I like to kind of kick things off just talking about some of these origination stories. I know we have founders at every stage, and I think coming in and doing entrepreneurship, whether that means in tech or a brick and mortar business, it's a big risk, right? You're going from working for somebody where it's a stable paycheck that's coming in and you know when it's going to come in, theoretically, and then you go and you start something on your own. I'm curious if any of you guys have like some really compelling just stories around how you ended up starting this business that you're in now. I know you've done this now multiple times, right? So even for multiple time founders, what's the masochism in you that's like propelling you to do this multiple times again? Because it's a tough road, and I don't think it's discussed as often as it should be in terms of what it really entails. And for you, Ryan, that's much further along now too. I'm sure that you've got your own set of war stories from the first maybe.
I had no gray hair before I started this job, so gosh, I mean, what prompted me to start? I mean, I was a lawyer, right? So I was a lawyer with a problem. I needed to manage a lot of deadlines and cases. And I would find that I would ask somebody to do something that had a deadline that the court cared about. And a week later, I would say, hey, Bob, where are you on that thing that you have to do before tomorrow? And he would say, I don't know what you're talking about. And that really scared me. And so I wanted to make a system that would prevent lawyers from making those kinds of mistakes. So that's what prompted me to start the business. I could go on and on.
Yeah, I mean, did you have a technical background? And like, how did you even think about?
No, knew a friend of a friend who was a programmer, and he actually had a job with Amazon lined up. He was starting in 2 weeks. Just a really incredible guy. And I said, look, just help me start this between now and when you start. And he said, great. And when he got to the end, and he was about to leave, I somehow convinced him to stay. If I have like anything I'm good at, and it's not much, but I'm really good at one thing, which is convincing people much smarter than me to work with me. And I was able to convince Jim, and away we went.
Wow, okay. And still working with you now?
Unfortunately, he passed away. Just about 6 months ago. Yeah, kidney disease.
Wow. But I have been working. You guys have been working.
Yeah, totally, absolutely.
Yeah, got it. I think speaking to that point though, about finding people to work with that's much smarter than you. I'm sure you guys have gone through that route too, because I think that's really instrumental. I think a lot of, especially the CEOs, aren't really the most smartest of the bunch. I think they're just really good at attracting good talent. You're nodding your head as if in agreement, so any thoughts on that?
Oh yeah, I mean, it sounds cliche, but it really is all about people and finding the right talent. You can have all the great product ideas you want. If you can't execute, it makes a big difference. And it's also a big difference to find people that have the kind of depth and experience that you want, but also have that same entrepreneurial drive.
Yeah.
Because it is a rare breed. Ryan and all these guys, rare breed to like start that business and go for it, and finding partners that are willing to take on that same risk, the same reward, that's probably the most important thing we do, or I think I do as a CEO.
Yeah. Luis, you and your co-founder came from Google. So how did you guys come across landscape? And then convince yourselves to go do it? Because I don't imagine you have a ton of domain expertise in that field necessarily.
Yeah, no, I don't. So the story is I moved to Salt Lake during the pandemic. I was in Mountain View before, and I had always had to drive to start something. I wanted to start the business, and then something happened. Like I got hired by Google, and I was like moving all across Europe and in the US. So I stopped and I said, okay, I'm going to take a break, and I'm going to think what's the business that I'm going to build. So I was like, I need to lower my burn. So Silicon Valley prices are not acceptable for my bank account. So I started looking for places. We actually bought an Airstream and head east. The idea was like, we'll find a place. And when we hit Utah,
It broke down.
no, actually, it was the hottest year. We were in this tin can. I was like, we had to rent a place in Solitude, and
cool.
we stayed there for like 2 months. And then during that time, I had been coming to Utah for skiing before, but I was like, how much is a house here? And long story short, I ended up buying a house, which I was not planning to. But then just like hiring people to do work for the house was such a horrible experience all over the place. Like it is just like finding the people, the quotes were all over the place. I didn't know what the fair price was, and they wouldn't show up. And I was like, there must be a better way. So that's kind of like what triggered it. And I started on Nextdoor asking my neighbors, like, hey, what's the next project you want to do for your house? And like 50% of the people were like, oh, I want a Surdscape, because there was a drought, and people were like, oh, there's incentives from the state to do that. So I was like, all right. And the initial idea was to do like a Groupon for neighbors. So you would get together with a neighbor and get a roofer or get a landscaper and do that together. But yeah, we hit a wall with the customer acquisition. And one of the ideas that we had was like, let's offer people to do the design for free. And that just took off. Like everyone wanted to like do it. They were posting pictures of their yards and like, oh, do mine. It was like, okay, maybe this is the product that we need to build. And then when we acquire all the customers, then we can connect them. But this is the thing we need to build right now, and that's what triggered us building the
Interesting. And so from ideation to then having a product, like from you moving and then identifying that problem that you wanted to solve, what was the process of that like?
I think it took me like what they call the -1 to 0 phase was probably like 8 months of me like during my, in the meantime we were touring around with the RV and stuff.
Yeah.
But it took like 8 months until I was able to convince an ex-colleague. He was the initial CTO, and now I have a different CTO, also from Google. Like the network at Google just keeps giving. But we talked, and I presented the problem. I was like, oh, dude, I just bought a house. I have that problem. I understand what you're talking about. I'm in. So he started like moonlighting with me, just building the product, nights and weekends.
Got it.
And that's how we launched the initial phase of the company.
Got it. So you guys are still working full time and then just doing this nights and weekends first, and then
I was full time. He was doing nights and weekends.
Okay.
And then late last year, when we got the investment, we got the pre-seed round. My investor contacted me and he's like, your co-founder is not going to join full time. I'm like, what do you mean? Like, of course, we've talked about it and so on. And I called him and he was like, oh, I'm not sure. So he ended up not joining. So I had to scramble and find someone who wanted to take the CTO role. And it ended up being one of the people who had been working as freelancers with us. But he was not considering being an entrepreneur. And I think it's what he was saying was like, if you hadn't been thinking about this, you don't know what you're gonna endure.
Yeah.
But so yeah, when we started the company, it was like 3 co-founders, and we worked for a year with no salary.
Yeah.
And you need to have that endurance and enough money in the bank to just keep going. And it took us until this. We got the company running in February. We got the investment in December. And by December, my 2 co-founders had dropped.
So you took all the money yourself.
Oh, I gave it to my new co-founder. I needed to, like, the guy was a researcher at Facebook and worked at Google, so he's pretty
Pretty good too.
Amazing.
Got it.
Amazing.
Got it.
Yeah.
I mean, I think that speaks to the point, right? We just talked about it's a rare breed. It's not for everybody. I think a lot of people also think like you have a great idea, you're going to go raise some capital, and then you're going to go build your idea, right? But I think it's so much more critical, and the real path to it is you're bootstrapping for a certain amount of time. Whether that's formalizing an idea, doing market research, right? Building some kind of MVP. That part is, you're never going to escape that unless you're somebody who's done it like 3-4 times and have returned a good investment for investors, and then, sure, they'll cut you a check blindly. But I think outside of that, majority of them have to go through that process. Mo, for you, how is that like?
Yeah, I'm the only founder left of the group that started initially, and I'm a pretty big, now I'm realizing that there's certain people and stages of companies, I think, that are meant to take you from 0 to 1, from 1 to 5, from 5 to 20. And I've stuck with it because it was my idea. It's what I've loved to do. I bootstrapped the company for the first 5 years. But one of the biggest lessons learned, I think, is that as a engineer / entrepreneur, I like solving problems, and I like building things, and I like rolling up my sleeves. And I think one of the hardest challenges as we scaled and grew is giving up some of that stuff. Realizing that I can't grow out of just me doing all the work. And so it's definitely been a challenge a little bit, and finding the right people, I think, is, to our point, the hardest part of this journey. And I have definitely messed it up a handful of times by hiring the wrong people. And then you realize 6-8 months, a year later, and now you've lost all this time, you spent all this money. So I think the people part is super, super critical. But the original founders, they're also the reason that I'm here today, right? So I think everyone has a part to play in this journey. But as you scale and grow, I think for me at least, it's the realization that I can't be the one that's gonna stay up all night and do the configurations and sell them for 60 customers and implement them and do all that work. It's more starting to scale outside of me and finding the right people that can do that.
Yeah. Interesting. And you came in as you weren't an original founder, but you came in as a co-founder role later on, right? Because that's another viable path for people who are interested in entrepreneurship, right? Is like come in with something already a little bit of traction, a little bit of semblance of perhaps market fit. What convinced you? Because you're still a risk at that point still.
So my story was, I was the right hand, we worked at a company that sold CRM into car dealerships, and we always had a problem implementing these dealerships. And I worked very close with the founder, his name is Peter Ord, and he used to tell me, he's like, dude, we can solve this problem, we can solve this problem, we can solve this problem. So I said, hey, why don't you go solve that problem, and then call me once you have a prototype. And so he actually went off, he created it, he was not a technical founder, but he was the visionary on it. He created the first prototype of it, and I said, you know what, like, if you give me a cell phone, I'll put up deals. Like, that's all I need. And so that was the agreement, essentially. Asked for a computer, too. And then I just said, yeah, like, I believed in the problem that we were solving. And I think, like, to these guys' points where they're saying, like, hey, like, the people, like, I believed in the same vision that the product was solving. And if you find somebody that believes in it, like, that's the key hires, I think, that were there. And so I went and I immediately said, okay, like, I know that this is a problem within our last company, so I went and called the people that implemented my product in my last company and said, hey, I know you lived through this pain, we're solving it, and those are the first people that we started bringing into the organization that still had that same vision of what we could become. It wasn't just necessarily this person wants to join a startup and get all this equity and then sell it later, and that's like their whole hope. It was the people that really saw that vision. And so then we really started going after those type of people that had that problem. So yeah, anyways, our story was, Peter kept working on the product, kept working on operations, and I said, hey, look, just give me the sales and marketing piece of it, and I'll put up deals for you. And we just kind of both had our own roles and responsibilities, and grew it ever since then. But I don't want to take credit for starting the company. I was the guy that took it to the market. So.
Well, still very instrumental. And I think that's like something that goes, I think, understated is that, it's hard to be a solo founder. And I think it's super important, if you are a solo founder, to find the right pieces to kind of come together and complement the team in a way where you all have respective roles for one another, but are very different and own different parts of the business, right? Especially, I think, like, as you grow from 0 to 1 or 1 to 5 and 5 upwards, but each of you guys are different phases. Now, your business, you guys are still fairly early on, even though you guys are backed by Benchmark now?
Yeah, so we do 8 figures. We do
Yeah.
tens of millions in revenue, and it's profitable business, but it is still very entrepreneurial. These guys have talked already a lot about AI, and not to go so much down that rabbit hole. That is in my world, probably in anybody's world that has a software platform or a digital content platform. You have to be paying attention to this. So it's those pivots that matter. Before that, it was Web3 and NFTs and digital content. And so being able to flex in and out of those different opportunities is difficult. But so it's still very entrepreneurial despite that kind of revenue because of just the changing landscape and the market that's out there and the technology that is just evolving so quickly right now.
Yeah. Let's talk about it. I mean, let's talk about AI and how it's changing, right? Because that's 2 years ago it was Web3, and now we're in a different space, and it obviously feels a little bit more real, I think, than Web3 did at the time, and we know it's not going to go anywhere, really. You mentioned how it's impacted your business and the growth trajectory. Something you probably couldn't predict 3, 4, 5 years ago?
Yeah, I mean, no. We had some AI working on some predictive analytics, but I mean, that was the traditional ML. So nothing like large language models. So absolutely. For what it's worth, I don't know who got faked out by Web3, but I mean, that was... that seems stupid to me, like from day one. But
this guy invested his family.
Right, I'm sorry.
Should have called you 3 years. Thanks, man. I appreciate it.
Yeah, so I mean, for us, look, I'll just take what we do, and I mean, you don't have to be a genius to be like, oh my gosh, like an area of the market, an industry that relies entirely on language might be really advanced and have a lot of demand for a large language model. And so there are about 10 million pages of documents that get scanned into Filevine every single day. And that's growing at about 4% every week. So it's just a wild amount of information. And that information has to be consumed by lawyers who then have to take actions on those things. And at first it was about doing the summarizations and then extracting kind of key data points. We've now got to the point where a lawyer could kind of give us an entire set of documents, and what somebody would have done on our system 2 years ago, they would have typed in kind of what's in those documents into our database, which we thought was like the thing. Now they don't do any of that. The documents are literally mapped to the individual fields within our system, saving hundreds of hours of work for a law firm. So pretty incredible. But of course, the next step is then kind of that agentic step. Okay, here you have the data. What are you going to do with the data? What tasks do we automatically know need to happen? What APIs can we call to take next steps? It's going to be a wild world for lawyers in the next 5 years.
Yeah, I mean, your world's fully baked into the product, in yours too, right? So you guys, or Louis, you mentioned you're using AI into your product too?
Yeah, so my whole career at Google was AI. So it was previously ML. I worked on search quality and recommendation systems and all of that kind of stuff. I did do a stint in Web3. I worked at Coinbase for a year before I moved to Utah. Well, actually during the time I was moving. But yeah, like AI was part of like my natural, like I was always paying attention to what was happening, because any breakthrough in technology would translate in product. So I had to be like really on top all the stuff that was happening and what new things we could do with product. So yeah, that was part of it. And yeah, our product is AI.
Is all AI, yeah.
That's the main thing.
And how about for you guys? Are you guys using it as part of product, or are you using it operationally, or?
We're using it operationally for sure, but we're starting to introduce aspects of it into product. For us, it's sort of the world of experience personalization is really where AI becomes very powerful for us. We're a platform that allows you to curate disparate things to do into cohesive experiences. Right now, most of our clients come in with these experiences already built. Think of a static blog page that says, this is my 10 favorite bakeries in this area. We can create those into a tangible experience. But the future, what we're looking at now, is being able to take a variety of inputs and leverage AI in these models to actually create a one-to-one personalized experience for each individual person instead of one experience for numerous people. So it's on our radar, and we've started implementing low-level generative AI into the platform right now.
How about for GuideCX?
Yeah, the thing that I noticed is that as you're starting to go to market with these products, it's like people don't, at least in our world, they don't necessarily know like what is AI going to do. They just have to check the box to say that this product has some sort of AI involved in there. And so like 2 years ago when you get an RFP in, it was like non-existent. Now, every large organization that you work with, they say like, what do you do with AI? And so we have our story as well too, right? We bring it in, and ours is done through more of like a reporting aspect of things, where if we want to see, hey, how many implementations are running 90 days and still you have a sticky customer after 1 year, right? The AI can automatically go in there, integrate in with different tech stacks, pull those customers out, marry those two together, and we can start to get data based off of how the implementation is affecting things downstream. So it's more of an ask it a question, and it tells you the answer based off of reporting is how we do. But what I can tell you is that it's like every person says like, well, do you have AI? And I always ask them, well, what do you want the AI to do? Well, I don't know, but my boss tells me that I need to have AI in this thing. It's like, all right, well, it does. And let me tell you like the really cool things that it can do, so.
Switching gears a little bit, I know a few of the audience members have asked about fundraising and just kind of better understanding that landscape of things. Obviously, things have shifted a lot in the venture capital world the past year or 2 years. But for you guys that have been at this for a little while now, what have you guys noticed that's been different? And if you've raised or haven't raised external capital, what's been some of the pros and cons in your experiences?
One of the big things is just the visibility towards solid unit economics is pretty top of mind, unless you're in perhaps an emerging field where you can take more bets against it. But when we raised, this is our third round of capital. After this round, we raised about 11 million. The first two are more around the larger vision and just spend the money and accelerate. And now it's sort of the opposite of we want to see a path to profitability. And a lot of the conversations we're having. And if you can grow a little bit slower, we're okay with that as long as you can sustain it in the long term. I've basically switched my mindset of how I run this business at the beginning of this year, where I assumed, whether or not it's true, that this was the last round of capital that we were bringing. And so based on an assumption then, I did a RIF very early on when I didn't need to actually, which opened up runway. And now we're in a fortunate position and we have enough cash to get us to profitability with still money in the bank at that point. But I think that's one of the big things I've seen definitely has shifted, where if you have a high burn multiple, or you don't have a good path to profitability, or you don't have repeatable sort of traction towards generating revenue and relatively good retention, it seems like it's quite difficult right now to raise capital.
Yeah. And how's that changed for you since like the first two rounds that you did? And I mean, in terms of just, I guess the mindset, and also, I guess from a logistics standpoint, like how are you thinking about it from the amount of effort you're going to need to put in terms of like getting to a successful close?
Yeah, it's a tough one for us. The position that we're in, I think, is a bit unique in the sense that our business is in the transition mode right now from a managed service business into true self-serve and PLG. And so that's caused a bit of friction in raising the capital because all of the numbers that driven us to here, we're at just around 5 million in ARR. All of those things that got us to this point is not what's going to get us to the next level. And so it's around this balance that I just strike right now of articulating the traction that we've gotten to this point, which shows that we have product market fit, and the benefit of the operational efficiency we're about to gain when we release the self-serve software on May 20th. And so that's a bit of a challenge is I feel like I'm back like at the beginning trying to prove some of this stuff or say like, I know this is true, but doing it when we already have traction, we're sort of further along. And I think that's the sort of challenge I'm in right now of articulating a future that we have very good evidence and proof is true when it's not here just quite yet. And finding that right investor that it has conviction to believe, wow, you have traction, you have product market fit, you have nearly 500 paying customers on the platform, and you're now transitioning this and having them sort of envision what's going to happen when that switch sort of flips.
Ryan, did you go through any of that?
Yeah, of course I did.
Because I'd imagine so.
I mean, I sort of tend towards like transparent. We've raised 170 million. Have never had a ton of problems raising. We might have, had we not sort of been kind of in the right place at the right time recently. But I'll tell you, I've never been very good at pitching. I'm not like, I don't think pitching's the thing. I think that's kind of ridiculous. I just go work on the business, don't work on your pitch. For us, and look, I'm sure this isn't true for everybody, and I'm sure it's different. But, and by the way, like, I've got tons of stories, bad stories about raising. I could go on and on. But like, we have had a relatively easy time, I think, compared to most. But they've always come to us.
Yeah.
They've always come to us. And so I haven't had to spend a lot of time with that. But we really work hard on the business. And like you, I think, did a riff and sort of unapologetically. Yeah. And I don't know about you, but like for us, the culture was so much better. We're a scale business of 400 people. We were 500. And in fact, we have fewer people. Revenue's double what it was 2 years ago, more than that. And we have fewer people than we did 2 years ago. And yet we are much more efficient, much more productive. People are happier. When you get to kind of a larger scale and, different businesses are in different positions, gosh, like, it's way better to have fewer good people than a lot of not great people. And culture, bad culture, and I would say kind of culture that doesn't focus on getting things done, it will come up like weeds throughout your company, and it has to be unrooted continually. I have been shocked at how challenging that is. The last thing I'll say, and I feel like I'm talking too much, there was a point when we did our riff where we would have to have conversations with people where we would say like, okay, you were doing this job, and now you're gonna have to do this job. And they were like, oh, so I'm switching jobs? And I'm like, no. To do 2 jobs. To do the old one and the new one. And by the way, we think you have time to do both.
And we're not going to pay you more.
Right, exactly. Oh, no. In fact, like, there's definitely no bonuses this year. Yeah. Those are hard conversations, but I think the good people can understand why if you explain it to them. So.
The other thing was on top of that, I think when you make these types of decisions, I think your staff sees you as a leader that's willing to make the hard choices, because it's never easy to eliminate positions. This is people's lives, it's for families. But to that point, I'm also seeing A players like to work with A players. And exactly to your point, when you have underperforming people, it actually brings the culture down. And exactly what you said is spot on. With 20% less people, we're getting more done than ever. Yeah. And I'm going to likely do another one because I frankly think we can run the company with double the revenue with half the people that we had last year. Not only because of software, but when you get very focused and you get the A players together, they typically operate at a higher level.
You're going to need everybody here to sign an NDA if talking about
everyone already knows about us. It's fine.
Yeah, I think the time to make tough choices are not when there are tough times, and that's what you guys talk about. I mean, making those decisions. Yeah, I look back now, some of my biggest headcount changes were after we closed on capital. You know, not when you get to the point where it's like, hey, I'm not sure if I can make the next payroll, which there are those days and they're really tough, but that's not the time to make tough decisions. I would say broadly from an investment perspective, and you guys can correct me on this, but we're in the market fundraising too, and my take is VC funds, those that you would want to align yourself with, are loading up right now. Like, there's a lot of funds being closed, a lot of money being gathered, but yet a real reluctancy to deploy. Or maybe it's not reluctancy, maybe patience is the right word. That they're waiting and they're being very picky around those opportunities. I'd love to spend some time with you about raising on a business that is foundationally so dependent on AI, because man, so much noise right now, like hundreds and hundreds of deal pitches come across desks of the kinds of VCs that you'd want to align with. So how you're able to differentiate on that technology is important too. But I think there's money out there. I think there's money that you can go and get. You should be picky, and they're going to be picky because they're being more reluctant to deploy today. But they're raising a ton. I mean, like a TA Associates, as an example, just raised a $1.7 billion fund. And again, obviously not to speak for them, but I would be very surprised if they deploy any of that in the next year, which is unusual, right?
Yeah,
like that's
kind of waiting to see.
That's a different investment market that's out there.
I have, so my thought process on the whole VC world is the ones that we worked with, in my mind, like, they're the good guys. And I still think that it's very beneficial for, at least from our standpoint, to have good partners that are with you. We would not be where we're at if it wasn't for the cash, and B, the help of the venture people that we work with. And so I know you brought up you have to be choosy. Like, we had a couple different offers from different people, and it almost goes back to, as dumb as it sounds, like the premise of Shark Tank, where those guys come in and say, hey, we're the sharks. To work with us, it's going to cost you a premium. We went down that path of picking out somebody that didn't give us the best offer. In fact, they're partners with you guys, Meritech Capital. I think you would probably agree, phenomenal partners to work with. If I had to do it all over again, like 100%, like if I look back, I'd be like, yeah, we should have raised a little bit sooner. And B, like, I recommend every single person to the people that we do business with, because like I go on vacation with my, you probably know Diogo.
Todd has never taken me on a vacation.
Yeah, well, I go with Diogo. I go with like Diogo. Haven't been with Paul, but phenomenal people. And those type of people become your hugest champions that are out there, and they will help you. And in my mind, like I said, like it shouldn't be something, I believe, that you say like, don't touch that, the money's too expensive, it's not out there. It's like, they're being picky as well too. And to your point, I think like if you're picky, like you'll find the right match, and that really becomes unbelievably beneficial to the company.
Yeah, for us, it felt like chasing, like it was last year where things just started changing. Like every month was different. So we would talk to someone who's like, okay, you guys have like the right background, so like the founder fit works, just like have a good pitch. And it was like, we would pitch and it was like, no, you need to have, you need to have a prototype. So we built a prototype. No, now you need to have an actual product in the market. Okay, we built a product. No, you need to have users. Yeah. And then we had users, like 10,000 users, like, okay, now we're gonna raise. Now you need to have revenue. Okay, all right, so like, now we started having some revenue, but yeah, it got through all those stages, and finally we caught up to the, like, okay, now you check enough boxes, and that was the right time to raise. But
I think that's a good point though, right? I think there's a lot of also wannabe founders out there that I think that's the job is to go raise capital first and then build a product. And I mean, now it's, before maybe, yeah, 5, 10 years ago, sure, like that might be feasible. Now, I don't think so. I think it's to your point specifically, trying to raise last year, like that was a tough market, and congrats to you to be able to do so. But yeah, having to walk through and get to that place of getting a product live, getting your customers, being in revenue is so important, let alone having a path to profitability. I think, there's also a flip side of, I think, raising capital, and is that I've also heard stories from other panelists from other cities and other companies of when you bring somebody in on your board, it can be a challenging thing, it can be a very valuable thing, or it could be something that holds you back. Any of you guys maybe haven't personally necessarily gone through it, or have heard stories of like toxic boards where that might be the prohibitor for the growth of the company? And I think that's something that should be talked about, because I think a lot of, again, the founders think, oh, it's capital and it's going to help us start growing the business, but you don't think about the fact that they are, they're selfishly focused, right? For most of the times, to a certain degree, they need to see some kind of outcome, right? So whether that's how they're going to drive it as a board member, or also potentially like the terms that they put into your raise.
I can go. So we definitely don't have a toxic board, but I have seen areas where the board's been really helpful, which honestly is kind of infrequent, if I'm being honest. There are sometimes I've seen like, there are 2 or 3 key pieces of advice that a board member has given me that I thought, oh my gosh, this like made a material difference in the company, and I can like track it all the way back to where we are today. But gosh, I count those on one hand. Yeah. Most of the time, it is knowing kind of when to ignore their advice. At least for us, like they're not in the business day to day. I'm not going to out any of our board members, but like I don't think any of our board members have ever looked at the product once. I'm serious. They haven't logged in. They haven't clicked around. They don't have a damn clue. But that doesn't mean they don't know what good looks like. And so they can see around corners in that way. And that I have found helpful. But like your instincts around what your customers need and what your product should do, I think those trump what a board member says all day long. But a good board member, like Paul or Jonathan or Album, will know that and stay the hell out of your way most of the time.
So full transparency, when his board meeting is done, they drive down the street and they pretty much come to my office.
And they're super upset.
Yeah, the thing is, they're already exhausted. They don't want to go through another one, and it usually just becomes we just joke around with each other, show them the board slides for 30 minutes, and then we all roll out. But it's a very different. Typical. Yeah, it's a very different dynamic, I think, in ours. But to Ryan's point, like I think I had the vision that when the board is going to come in, they're going to give you like all of the answers and be like, all right, this is the path that you're going to go down. This is how you're going to make the money. And you get in there and they're like, okay, like, what do you guys want to do? And I'm like, well, what should we do? And they're like, no, you run the business. And I think to Ryan's point, like what's helped us more than anything is in some of the executive hires, they've been very influential in either helping us find people. They've been very influential in making sure that our financials are in a good position to move the business to the next stage and to help the business continue to grow. They've been very helpful when it comes to, hey, like, we're thinking about kind of taking the product down this space, and they can say, well, you know what, like, let me get you in touch with 3 or 4 different people that have gone down this path, kind of talk to those people, and if it's worked from them, like, they will connect you to people that have kind of been there, done that, and that's been unbelievably helpful to us. Like, when we started the fundraising piece, you know, one of the things I said was like, all your money's green out there, like, whose money's more green? And one of our investors, Album, phenomenal guys, like Diogo came to us and said, hey, look, like I'll walk you into 5 or 7 different portfolio companies of ours, and I'll make intros to you guys, not just to sell the business, but here's the sales leader over here, here's the operations leader over here, here's the legal over here. And it was like completely helpful for us in that aspect of it. So that's where they came in and really kind of connected the dots. They don't just tell you, this is how you're going to run your business. And anyways, for what it's worth.
Yeah, I would just add, and I think Ryan said it earlier, they don't run the company, they don't get the company, they don't understand the business. I don't look to my investors or board members to help me be operationally good at what I do. Where they really come in is when it comes time to exit. Like I trust my investors, my current investors and my board explicitly in helping me raise more capital and do things like that so I can focus on the business. So when you pick those investors, the right ones, they get that just run your company, man. Just do a good job, run your business, be profitable, grow, and we'll help take care of the rest. I would say that as much as a board doesn't help operationally, they can be divisive if you have the wrong people in the wrong seats, and that can be a problem, right? And a great earmark of that is if you have board members, if you have investors that want to be involved in the day-to-day, oh man, that's not a good investor. They're just not. They've got 20 other investments and they're going to fly, they're going to come in, do their drive-by, tell you what they think and leave. That's not helpful at all. And to the extent you can figure out how to vet those kinds of investors before you take their dough, it's pretty important.
And that's one thing that's a good point of vetting.
Yeah.
And I think early stage founders, you just think about the check.
Yeah.
That's right.
That's all
Exactly.
you care about. Lesson learned, I think, because I think being selective is big, but it's a balance, right? Because early on, you need the cash to be able to survive and grow. Regarding the board, I agree with everything that we're saying, which is that the introductions they make are valuable. My best board members say to me repeatedly, we invested in you, so we trust you to make the right decisions for the company, that we're not going to tell you what to do. We'll be there to guide you. And funny enough, one of the most value-add individuals is not a board member, he's an investor that's been an operator, that's done this. This guy flew to Buenos Aires with me months ago to meet with our engineering team down there and mentored us and showed us the right way to scale and build engineering teams. And so I think it's also around, identifying what you're looking for from the variety of investors and board members and understanding what value you believe they can provide best to the business and actually leveraging it. I make a joke with this investor. I say, I'm probably using up more time from you than you give to your boards. And he's like, that's great, because you're coming to me with these things and I've gone through it before and I can guide you. But I have had board members that were trying to drive the ship. And it becomes a problem because your perception is, well, they wrote the check, right? They're the preferred members. They can drive it and it's a huge issue because they're not in the business. And they don't know necessarily what's going on.
Do you mind if I make one more comment? And maybe the JP Morgan guys, either you'll appreciate this or you'll kick me for saying it. LBOs are a thing of the past, right? So any investor that tells you they're going to give you $1 and try to leverage that up to get $2 or $3 or $4 of debt, that's not healthy. It's just not. And so debt plays a really important role in our business and should in any founder's business, but man, investors that are expecting to put a little bit in and expecting debt providers, and again, the landscape has changed so much because of what's happened over the last year and a half or so, but I would steer clear. I would steer clear of any VC investor, any equity investor that would tell you, okay, now let's go leverage the business with a bunch of debt.
Yeah, I think on our side, we were super lucky as well with our investors. First, it was hard to find investors that would invest in consumer companies during the last year, and that thinking of like monetization will come later. Let's build the product, let's build the users, let's build the kind of like buzz going. There were very few investors that were kind of like thinking about that. And when we were at the point of raising that round, we had another investor that was kind of pushing for like, I want to see money. Where's the money? Are these users paying? Are they coming like as tourists, like AI tourists as they call them, or are these actual paying users? And so we started like launching experiments to prove that, yeah, these users would pay, but not trying to push that monetization too far. And these guys, when it came to the point of like raising, I was like, dude, I need to get money. Like, otherwise we're gonna run out. And when he identified, like, okay, these guys are gonna invest, the next weekend he had a term sheet with like, they're gonna offer you a low valuation, so I'm gonna give you this term sheet so that you're not like forced to take a lower one. And that effectively was like a third of what they were valuing us at. And they didn't come in the round, and they were like, don't worry, we're gonna raise the amount of money we're gonna give you, and you just kind of go and run, don't worry about monetizing, just like, build what's best for you. And so they kind of get it, and that's I think the most important thing, like partnering with someone that understands the needs of the business and how you need to grow it in order to get the traction that you need.
Yeah. We're running up on time, so I want to be able to have some time for questions. But one more last thing would be, as a founder, even as a multiple time founder, a lot of times you're doing something that's it's all brand new, right? It's like the first time you're doing it, the first time you're going to IPO, right? It's like, what are some of the skills that you've picked up along the way that you never thought when you started off down your original career path, whatever it might have been, that you never thought you would pick up, either loved or hated, have some emotional disposition towards either or? Because I know we've all worn a lot of hats now down this journey, and some of them we really love, some of them we probably don't. I mean, like, firing people is something that takes getting used to. Figuring out how to quantify that to actually make it make sense to be a part of the culture. That's challenging, right? That's probably one of the more challenging things to do as a founder. Maybe we can run through real quick if you guys have any like bits of advice on that.
For me, cold calling. I guess I'm the other.
Oh man, you've never lived. I love that.
Cold calling is brutal. At some point, we were like trying to sell to landscapers and just being hung up. Like 90 out of 100 calls was rough.
That's a good ratio.
You should have stuck with it.
You should. I'd be a billionaire if I was getting that.
I'm not saying I was converting 10. I was getting like hung up.
Yeah, I know.
Get lost kind of thing.
Anybody else?
I mean,
That's a
one,
common one,
managing the board,
Yeah.
for sure, which is something that I never thought. And then two, before this company, it was very like a singular focus always. One of the, not good and bad, is like the notion of understanding how to context shift and have different conversations with different people, I think is really important. Not only the language you use, but the tone you use. Whether you go talk to a board member, to now your CRO, to now an individual contributor, you have to switch that pretty quickly, which is something I had to learn as we grew.
It's super hard.
Yeah.
Super hard. I'll throw Meritech a bone here. They are great investors, and they have helped us a lot. I think the best thing that our investors have done for me by far, so about 2 years ago, they said, hey, we actually have this coaching program, and I don't know if it's at Peter up the same thing, but they actually like ran me through a series of interviews with folks at their firm, and then they said, okay, based on this profile of your personality, which I'm sure was like, oh my gosh, like he's like nearly nuts. But they said, based on your profile, we're going to set you up with 3 different coaches, and then you pick which one you want. And so we did that, and I was able to get connected to just an incredible guy. I think he's coached for kind of a lot of high-profile startups in the Valley, and I meet with him once a week. It's absolutely incredible. It's the best part of my week. And so, as founders, I don't think we like to talk about that and sort of the mental health thing. I mean, it's not therapy, right? He's a coach. But gosh, that's like incredibly helpful. And centers me and makes sure I understand what's most at stake every week. We think about kind of what's giving me confidence and what isn't in the business every week. It might be the only time I fully zoom out on the business is that kind of forced conversation that I have with my coach. So if you have an investor, tell that investor to go hire your coach.
That's awesome. That's I think really important.
No, knowing who to talk to, who to trust, and who to share that kind of underbelly stuff is really important. The flip side of that, and while I believe fundamentally in being transparent to my entire organization, I realize that there's just pain I'm going to feel that I don't want anybody else to feel, right? I don't want to spook my team. I don't want my team to be scared about cash or, we just got a lawsuit because somebody thinks we infringed on their IP or whatever. There are certain things that I accept as the CEO and the founder of the business that I'm just going to have to bear that cross alone. Because creating panic among top performers, people that you've hired and you brought on to do a specific job, if they spend their time chattering amongst themselves about worries and concerns about the business, they're not doing what adds value. So, yeah, as founders, suck it up.
I think the lawsuits thing is also like a rite of passage.
That's right. Yeah. Just gonna get sued. AI, by the way, right? So, yeah, for sure.
But I do think that's something that, founders need to be expected of. At some point, you're going to cross the path with something like that.
Yep.
For me, well, to your point, HR, that was a brutal one. You always kind of assumed like people are going to show up to work and kind of want to do the right thing and want to work really hard and not take advantage of everything. And when they don't, it's like, oh, what a nightmare. And so that's been, we used to joke earlier, there was a blue trash can, like when there was just like 4 of us, there was a blue trash can in my office and I wrote a little sticky tag on there that said the HR suggestion box on there. I was like, that's if you want HR, you can go talk to the HR trash can. But the reality is, like, it is unbelievably important to people when you get outside of like the original like 2 or 3 people, and people are coming to work kind of for you and for what you're trying to build, and it really matters. And you have to take a significant amount of time to define what you want like your company culture to be like, because as it grows, like what Ryan was saying, like it's a lot harder to have that at 400 people than it is 300, than it is 200, all the way down to like 3 people. You don't necessarily need to define what that is. And the earlier you define it, I think the better off that you will be. And that's something that we've really had to like focus on. So we say, look, like our culture is defined on what you celebrate and what you tolerate. And we've really tried to define what that is, and that's helped us a lot. And so, like, people really matter to an organization, and you have to take time to just work on them and help them, and not just be so focused on the work that's at hand. And that's something that I had to learn as we started to scale this thing.
Last thoughts, Luis?
In terms of
Something you have to pick up. Oh, well, I guess it's the sales.
yeah,
thing, right?
the sales part, in my career, as PM, you're always selling. Like, there's the new product, the new thing, the new project, the roadmap. Like that was part of my role. But it was kind of a different sales when you go to kind of selling to contractors. I've come to the conclusion that if you have an industry that you're selling to, and I might be wrong, but I came to the conclusion that selling to industries where if you're like a SaaS kind of product that you're building, and they are in the millions, like in the case of landscapers, they are consumers. Like that is that kind of like thinking about those users or those customers as consumers, and how you sell to consumers is very different to how you sell to companies. So that's kind of like where I stand right now.
We say if you build it, they don't always come.
Yeah, that's true. Cool. On that note, any questions from anybody? Sure, we'll take this one first.
Yeah. So you were able to talk about how you confronted a problem and that inspired the business that then you were able to create. 2 questions related to that. How did you know that the solution that you had to the problem was worth devoting time developing a business around? And then second, as you confronted problems later, how did you stay focused on the problem that you were already trying to solve and not trying to then create another business, as you're observing more problems, that you need solving?
A couple of really insightful questions. I mean, for every one problem I thought I've developed a solution for, I have 10 that have failed for one that has succeeded. So, man, there's a lot of trial and error. I was laughing when, inside, sort of, crying inside too. When Ryan was talking about Web3, I always thought it was bullshit. So as the 2022 Silicon Slopes winner of Web3 Company of the Year, I didn't think that was the case, and went down a path, made a lot of decisions, dedicated a boatload of resources and cash, my own money, and it was great. It was feast, and then, boy, it's been famine. So yeah, it's just, there's a lot of trial and error. The flip side is your second part of the question, I think, which is, how do you know when to keep going down the path and staying the course and not giving up? And again, I think some of that's trial and error. I think you believe in the people around you, you believe in the thesis, and you go down the path and you work hard. But again, it's part of that trial and error.
It's also the notion of like revenue cures all. For me early on, when we introduced what we were doing, nobody was doing it. So it's sort of like defining this new category. So the first year in 2015, I had one customer. And then 2016, I got to 3. And as I started getting some more traction, I was like, oh, this customer not only sold them 2 years ago, but they just renewed. And now I signed another one. And now I signed another one. And then you start seeing that happen. Even if it's a new category, you start to realize, okay, there's something here. Because especially when we entered the market, I spent the first 4 years educating the market on the road. And as I started seeing new logos and then retention happened, I was like, okay, there's something here. And then to your second question of staying focused, that's, an entrepreneur, and as an engineer, it's always around new ideas. A very clear mission statement has really helped me boil it down to, oh, we've got this thing, we've got this idea. Does it align with that? And it's a simple binary yes or no. And if it does, we explore it, but we want to fail fast. If it doesn't, then it's not aligned with what we're trying to do. And that's just an easy way that I'm going to develop that helps me make those decisions.
I think it's also like let data dictate. So I think a lot of times people build out of ego. I've seen this happen a lot of times with early stage companies, and they don't take it to market, whether they're scared or whatever it is. They're perfectionists and they're trying to create this most beautiful thing in the world. You don't need to do that. You need to let the data show you what the market wants.
Perfection's a killer.
Perfection is a
I
killer.
have a joke in our company when like Gmail goes down, I say, even billion-dollar companies ship breaks. So like, don't stress.
We like Pete had launched the product and he was trying to get me to come on board, right? And he's like, no, like I'm telling you, people are going to buy this thing. And I was like, no, look, it solves my problem. Don't get me wrong with that. And I said, dude, like, let me go pitch it. So I took it to a couple of different companies and I went and I like pitched the prototype to them. And I'm like, hey, like, do me a solid. Like, this is what we're trying to do. Would you pay for this? And what is this worth to you? And as soon as I heard like 3 or 4 people, they were like, we have that problem as well too. I was like, all right, like, I'm in, let's go.
I agree with the problem. Like, you should never get married to the solution.
Yeah.
It's all about the problem. It's like for us, it was like, home improvement sucks. And it's just like, it still sucks and hasn't been solved. And then it's $500 billion market. So like, there must be some game there. And then you come up with a solution, you put it out in the market. And for us, it was like, okay, this idea resonates, but it's just, the problem is to get users. Like, how do we get users? And you just discover your path as you go.
Cold call.
Yeah, one of the approaches.
I think it's also to like think about the little baby steps as opposed to thinking, I think a lot of founders will talk themselves out of something by thinking about the 10th problem along the way. When in reality, after you take the first step, the 10th problem most likely will never come up because your path immediately changes. There's a slew of 10 other problems that you're now going to deal with. You had a question in the back?
Yeah, earlier you guys were talking about capital raising for this year. A recent stat came out in an article last year, at least in the private funds world, about 1,700 funds were actively fundraising, and about nearly 50% of all funds raised went to about 24 groups, which was very competitive with the remaining roughly 1,700. You were saying earlier that capital raising might be a little easier this year, but I'm just curious to get your take on how that might be easier and what your forecasts are in the next 6 months or so.
I don't know if we thought it was easier. I think it was that funds are raising from LPs right now, and they're raising funds for their.
They're still raising their money.
Yeah, they're able to raise money. I don't know if they're deploying this year.
Yeah.
You know, I think it's gonna. There is a wait and see mentality for sure. Nobody really. I mean, I'm just thinking from Mucker's side of things. Like even as an earlier stage VC, we don't lead rounds unless like it's a Series A that we invested a pre-seed on, right? So I think there's a lot of wait and see of just who's going to go out, and that's typically the hardest thing is getting a lead investor in the earlier stages. I think that's just the mentality, unless other people want to speak otherwise on it right now.
I mean, I want to be honest. We have not had a hard time with that this year, but we have had 20. So for us, 2021, like when everyone like could just get money and it was falling off trees. Our Series D, we only had 3 term sheets, but it has not been hard right now for us. I think categories get hot. We happen to be in a good category at a good time, but we haven't needed a fundraise, but they're crawling through the windowsills right now. So I do think it's dependent on the category you're in.
Yeah, and I think to Ryan's point, is just you were focusing on the business, right? I think like that's the key for everything too. Similarly, we haven't actively gone and try to raise after our seed. That's not the intent to, and we kind of closed the seed thinking that's the last check we would have to raise. Obviously, that probably will change, but I do think it's just making sure that you're doing it for the right reasons, right? Like. I don't think anybody really from this panel is like trying to focus on a liquidity event when they're like in the first 2 years of their business, right? You're trying to build a legitimate business that has revenue, that has customers, that has retention. And that's got to be the primary focus. And if it's chasing something else, some vanity metric because it's in some article, like you're going to fall to the wayside pretty quickly, I think.
I think broadly, you're going to see things start to maybe loosen up a little bit toward the end of the year or early next year, but let's not forget it's an election year.
Yeah.
And so funds are sitting on those funds kind of waiting to see what happens there too. So I think it's going to be still really difficult to raise in the first 3 quarters, so this quarter and third quarter, maybe by fourth quarter or early next year. Funds start to loosen up a little bit, generally speaking, but like Ryan said, it's dependent on your vertical, it's depending on your industry, it's depending on your individual performance, but I don't expect the purse strings to loosen up a lot, generally speaking, over the next few months.
Yeah, cool. Last question there.
Yeah, so if you guys were to start, I know you kind of have a range of 10 years as far as company goes here, but if you guys were to start a company this year, what would you do differently that you've done now that wouldn't have worked essentially this year for you?
I'm happy to take that. So I really love fall in love with the problem. I've heard that advice too before. I think that's like the advice in my opinion. Like for not just for your product, which is where it's most important, but even on the business, which I think has been echoed here. And if you're really curious about that problem, there's all these like knock-on effects that happen kind of automatically, and you'll make better long-term decisions. So I'll tell you what I think was one of our biggest mistakes. We're definitely like a vertical SaaS platform, pretty pure like play, just people pay us for software by the user. AI is priced a little bit differently, but it's just pure vertical SaaS. So early on, we thought, okay, we do this case management thing. Everyone really wants documents, so we'll just go integrate with a bunch of document providers, Dropbox, Box.com, that kind of stuff. There's some legal specific ones. I knew, like there was little Jiminy Cricket in my ear going, don't do that, you should just build a document solution. This is a bad idea, you don't want to be hanging on these other providers for your product. But we didn't. We thought we could shortcut the solution and get out there with a product that did sort of half of what our customers need and integrate with the rest. And it just wasn't the right call. And after about a year, we shut off all those integrations. Our customers lost their minds because they all had these integrations. But we said, we don't care. We're going to lose some customers as a result of this, but we are not going to spend any time chasing Dropbox's APIs Instead, we are going to build a documents product into the system like we know we always should have. And today we do. We have a really strong document solution. It's almost as strong as our first solution. Super proud of it. And it is so differentiated now in the market because we made that like hard decision, but we wasted a solid year, maybe a year and a half, chasing a shortcut. I don't know if that's helpful.
I have a similar example where when we launched, and I guess I would have done it the same, but I would have changed earlier. When we launched, we were using the APIs from Stability, and I'll just tell everyone that. But it was, at some point last year, they just changed the API and broke the service. But they didn't just break the service. It was like, the main thing we do, they just stopped supporting altogether. So I was like, we don't have a company anymore. So it was like, it took us, we just took all the stuff, the models, we had to build everything ourselves and just host it in any cloud. So now like, I'm very, very hesitant on depending, like your core business should never depend on an API from anyone. Like that is kind of lesson learned.
That's a particular problem in AI right now. Mm-hmm. It absolutely is dependency on other foundation models, for sure. Yeah.
Cool. On that note, let's give our panelists a round of applause. Thank you for giving us your time. Awesome. Thanks, guys.